Hello, traders, and welcome back to Explain the Charts. Today is March 27th, 2025, and we're diving deep into Microsoft, MSFT, stock, analyzing both the latest news and the chart data to help you make informed trading decisions. First, let's cover some key headlines impacting Microsoft right now. Recent news indicates that Microsoft has abandoned certain data center projects due to an oversupply, as noted by TD Cowen analysts. This has led to some downward pressure on the stock. However, analysts at TipRank still maintain a strong buy consensus with a substantial upside, giving conflicting signals. We'll correlate the news with the chart and see if the chart agrees or disagrees with the overall sentiment. Now, let's move to the daily chart. We can see that the stock has recently pulled back. The stock is trading near $389, far off from the $468 high. The long-term trend still seems relatively stable, showing consistent growth through the past year. However, we should keep in mind there was a large dip in early February 2025 and again in early March 2025. Let's look closer at the recent data and zoom in on the past 3 months. Here, we can see Microsoft recovering from the recent drop, and it had stabilized near $390 as of yesterday, March 26th. However, the news might indicate this may drop lower. Let's switch to the hourly chart to get a better idea of what may happen in the short term. The hourly chart provides a more granular view of the recent price action. On the hourly chart, there appears to be a downward trend forming. The recent candles show more red than green. If this trend continues, we could see Microsoft test support around $385 in the coming days. Let's narrow this down to the past week of hourly candles. Even more granular, we see that Microsoft continues to consolidate around the $390 level and has been trending slightly downwards. Given the news about the data centers, it might test lower prices. But to confirm, let's switch to the 15-minute chart to see if we can predict any sharp movements in the immediate future. Short-term traders might find the 15-minute chart useful for identifying potential entry and exit points. On the 15-minute chart, it does indeed look like there's bearish sentiment in the short term. However, remember that these smaller timeframes are more susceptible to volatility. Also note that on the 15-minute chart, Microsoft is neither oversold nor overbought. Let's narrow the time frame to take a closer look. It appears there will be resistance around the $392 level, and if that doesn't hold, then we could see a large drop to $385 or lower. This would agree with the negative sentiment about the company abandoning data centers. However, it might quickly recover. There's agreement by most analysts that Microsoft is a strong buy. So the short-term and long-term incentives are conflicting. Keep an eye on the volume for any breakouts of that support and trade carefully. So, to recap, key price levels to watch are $385 as a major support level. If that doesn't hold, then $380 could be tested. On the upside, $392 will likely be a level of resistance, which can be broken if positive news comes out or if people simply buy the dip. Unbiased, there's a 60% chance that the price will test at least $385 in the coming weeks. The conditions that would reinforce this is continued negative news about AI workloads. There's a 40% chance that Microsoft can break $400 in the coming weeks, which can be reinforced by positive earnings reports or new innovations released. As we approach the next earnings report, expected in late April, keep an eye on revenue growth and AI-related metrics, as these will likely drive the stock's movement. Thanks for watching Explain the Charts, and happy trading!